Hey, Eric here from 5minuteinvesting.com, and today I want to talk about what is price to earning ratio. Now, price to earning ratio is quite simple. You have earnings, which is the amount of money you earn in a certain period. That's usually a year, and you divide it. You get the price and divide it by the earnings. So, for example, let's say you earn $1 this year, and your price is $10. Then your price to earnings ratio is 10. So it's a very simple calculation, but you can interpret it a couple of ways. Now, I'm going to explain to you the first thing not to do when you're looking at price to earnings. Don't just set some sort of benchmark like, oh, it should be less than 15, and then just go with it. Do not do that. Because when you're looking at price to earnings ratio, you need to look at price to earning ratio with other information like technical analysis, the company's performance, price to book ratio, price to sales ratio, to know whether the price to earnings ratio makes sense. Now, here's how I usually understand price to earnings ratio. You have a house that makes $1 a year and the price of the house is 10. So without including all the discount rate and all that stuff, that means your price to earnings ratio is 10 divided by 1, which is 10. So that means in the next 10 years, you can expect a return that will give back your original price. So you make $1 every year for 10 years, hence the price to earnings ratio is 10. So that's it. If my price to earnings ratio is 6, that means I expect this company to last for 6 years. If my price to earnings ratio is 15, that means I expect this company to last for 15 years. So now you want to think about it. If my price to earnings ratio is 30, do I think this company will last for 30 years? And if you think it does, it better be a good company, because a lot of companies don't. And when you look at the world of startups, 99% of the companies don't last for more than 10 years. So you want to think very carefully. But there are some other questions that you will have about price to earnings ratio. What happens when it is negative? Are there some industries that you should avoid using price to earnings ratio? Maybe sometimes price to earnings ratio is not effective. And what should you do then? Thank you for watching till the end of the video. And I'm very excited for you because you're passionate about investing and you want to change your financial future. And I really appreciate your support. So now the biggest question for you is, how do these strategies, tips, and tricks fit into the entire investing approach? Because you're learning one of the 62 steps I teach on 5minuteinvesting.com. And when you apply all these strategies correctly together, your return is going to be tremendous. And since 2016, my return to date is 204%. So, how do these strategies fit into the bigger picture for you?